year. A number of Democrats are voting now on the side of crypto, understanding how important it is to a significant portion of the electorate out there. So that's the most important thing that's happened on fiscal policy. And normally we're not talking about innovation when it comes to fiscal policy. We're talking about taxes and spending and so forth. And those are campaign election issues. But we'll get more into those as the campaign year progresses here.
Cathie Wood talks about fiscal policy and monetary policy in today's video. It's time to watch the movie because it shows market signals, economic indicators, and new ideas.
So starting with fiscal policy, I think the most interesting thing from an innovation point of view that has happened on the fiscal policy front or on the legislative front is that SAB 121 and FIT or FIT 21, both of those are crypto legislation that actually passed through the House. FIT 21 stands for Financial Innovation Technology 21, the 21st Century Act. Now, the first one was vetoed by President Biden, and he considered it. I'm going to look at my notes here. Inappropriate constraint on the SEC, which needs to put guardrails on such innovation in order to protect consumers. FIT 21 passed in the House with 76 Democrats voting for it. The SAB 121 passed in the House with 21 Democrats voting for it. This is very important. Crypto or digital assets has become a single issue vote for many people out there. And clearly these Democrats have been getting the message because the party had been reticent to vote for anything crypto-oriented. Elizabeth Warren and Bernie Sanders and others having had such a big impact on that side of the aisle. Now, at the same time, we have former President Trump taking crypto donations and making a pledge to uphold the rights to self-custody in the digital asset realm. This is huge and reinforces the notion that this is becoming a campaign election issue. And for young people in particular, it's a very important issue. So this is progress. This is the three branches of government balancing one another out. The executive branch, President Biden vetoed one of these bills. And then the judicial branch has basically said to the SEC, you are out of line in a number of cases here, very notably the Grayscale case, which ushered in the spot Bitcoin ETFs, of course. And so we're focused on it and happy that it's an election issue as these pieces of legislation pass the third branch of government, at least one part of the branch, that's the House. It remains to be seen if the Senate will take up the FIT 21 Act. It is an election year. A number of Democrats are voting now on the side of crypto, understanding how important it is to a significant portion of the electorate out there. So that's the most important thing that's happened on fiscal policy. And normally we're not talking about innovation when it comes to fiscal policy. We're talking about taxes and spending and so forth. And those are campaign election issues. But we'll get more into those as the campaign year progresses here.
Bitcoin whales took full advantage of the drop in Bitcoin prices on June 11th, buying a total of 20,600 BTC worth $1.38 billion, according to blockchain analytics from CryptoQuant. It was the biggest day for Bitcoin whales since February 8th, when spot Bitcoin exchange-traded funds ETFs were only 6 weeks old and BTC was getting close to a new all-time high. Flows into Bitcoin whale accounts were around 1,300 to 2,200 Bitcoin per day. Bitcoin's price fell from $71,500 on June 7th to around $69,000, and it fell again. After a few days on June 11th, 20,600 Bitcoin flowed into addresses controlled by whales. The data hasn't been updated for June 12th, which temporarily halted the price of Bitcoin. Spike after things went better than planned at the time of writing. The U.S. Consumer Price Index showed that Bitcoin was trading for $677,500. This happened at the same time that Bitcoin supply on cryptocurrency exchanges dropped to 94,200, the lowest level since December 22, 2021, according to the on-chain intelligence platform. A drop in Bitcoin reserves usually means that the currency is getting stronger. Market where buyers think prices will go up in the medium to long term for Ethereum, according to sentiment data. Whales recently bought over 240,000 Ethereum, which is worth about $840 million at the moment. However, unlike Bitcoin, sentiment said that the supply of Ethereum on cryptocurrency exchanges has increased in recent days. According to sentiment data, 17.98 million Ethereum worth $63.1 billion are currently held on cryptocurrency exchanges.
So let's move on to monetary policy. You can see here, this is a chart that we've presented regularly because we wanted to track how inflation, how correlated it is to money supply growth. So here you can see M2 money supply growth in the purple line, and it had a burst during COVID as the Fed was trying to make sure we did not go into a depression and tried to provide liquidity to the economy. Hit 27% and has been decelerating ever since. It descended into negative territory in 2023. And actually, I'm sorry, this has been pushed ahead. It descended into negative territory in 2022. This chart has been moved ahead because money supply leads inflation. And so you can see the green line, which is the CPI on a year-over-year basis, has paused in here. It's been kind of stuck in the 3 to 3.5% range. And of course, the markets, certainly this year, have been very upset by that because the Fed is saying, hey, unless we see 2% inflation, we're not going to cut interest rates. Now, what we believe has happened here is companies are losing momentum when it comes to unit growth or volume growth. And they've tried to offset that, especially the impact on margins, by raising prices or trying to raise prices. And what we're learning from earnings season is they're not getting away with it. The unit growth has gotten worse for many companies. You raise prices, consumers now on strike are saying, no, we're not doing this, or we're going to trade down to store brands, which are much cheaper. And so what we believe will happen now, and we're hearing this, we're hearing Walmart, Target, Costco, Best Buy, many stores saying, we are cutting prices. Certainly those companies who reported through the quarter ended April, and most retail has their fiscal quarters ended April. We're hearing a lot of price cutting talk. And so we believe that will show up in the statistics going forward. And you'll also notice maybe that gas prices have started to come down again because oil prices have cracked. And you may have heard that OPEC is saying that starting this October, it is now going to expand production again. And so the futures markets are saying that oil prices and therefore gasoline prices will continue to come down. So that will help in the near term as well. As we've been saying for some time, we believe that inflation is going to turn into deflation. In other words, prices will not be rising on a year-over-year basis. They're high and they are still rising. The consumers on strike. Monetary policy, we believe, is still restrictive, and we think prices are going to crack.
Even though the U.S. Federal Reserve has been polite, technical experts still think that Bitcoin will soon rise almost 25% above its all-time high of 73,679, the next step before hitting the cycle's highest point of 3,832.91. $539 target stayed the same for in a post on June 12th. Just hours after the minutes from the Federal Open Market Committee meeting were made public, Bitcoin technical analyst CryptoCon said that the interest rate would stay the same with only one planned drop in 2024. CryptoCon backed up their Bitcoin prediction with the Magic Bands model, which divides the cycle into different levels based on the previous cycle. How to use peaks and valleys to guess future prices. The model assumes that once the price of Bitcoin breaks through a main level, like its current all-time high, it moves on to the next step based on how it moved in previous cycles. According to the model, Bitcoin is currently resisting. If it breaks through this consolidation period, it will reach level 3 at 91,539, followed by the cycle top target of $123,800. An increase to 91,539 would mean a 34% spike from its current price of $68,315 according to CoinMarketCap data. It will take some time to get there at level 3 of the Magic Bands, but it's the next step, added CryptoCon. The prediction came despite worries from other traders about the Fed's hawkish tone, which is a term for when the Fed seems to be taking a more aggressive approach to control inflation, such as by cutting interest rates less often. Don't forget to subscribe to our channel. Thanks.